Hey folks, want to jump on here and shoot a quick solo podcast. This one's going to be on the state of Australian startup funding 2025. For those of you who don't know, which maybe you wouldn't, I'm signed up to a email newsletter called The Chalkboard by Stone and Chalk. Stone and Chalk is Australia's largest non-for-profit innovation community and startup hub, dedicated to accelerating the growth of emerging technology companies, startups/scale-ups with hubs in Sydney, Melbourne, and Adelaide. It provides mentorship, investment, connections, and workspaces to foster a sustainable tech-driven economy. By the way, that isn't an advertisement or a sponsorship. The reason why I wanted to talk about this today is that I'm in the process of getting something going myself. If you are connected with me on LinkedIn, you'll probably find all the details there. Looking for co-founders at the moment. If you know anyone that is interested, please feel free to reach out. You can go back on episode 12. My email is ryanwconlon@gmail.com. Let's get into the show. So the State of Australian Startup Funding Report examines the largest data set available on the Australian startup funding landscape. In 2025, the report gathered contributions from close to 1,000 individuals and companies for their insights on the state of Australian startup funding market. This is on australianstartupfunding.com, which is a website that you can go and look through yourselves. I may go directly into the report. There's just a big overview of different numbers. For example, total reported deals 390, total funding is $5.4 billion, up 31%, or the total reported deals 390, down 20% on 2024. Total funding $5.4 billion AUD, up 31% on 2024. Most funded sectors: artificial intelligence, biotech/medtech, fintech. Top states by deal share: NSW, New South Wales, 41% of funding; Vic, 34% of funding; Victoria, and then QLD, Queensland, or VIC for Victoria. QLD, Queensland, 16% of funding. Highest raising startups: Firmus, they $880 million, Airwallex $730 million, and Synchron $303 million. Investors most excited about artificial intelligence, hardware, robotics/IoT, that means Internet of Things, enterprise software. For those of you who don't know, Internet of Things IoT refers to the network of physical, quote, things, end quote, embedded with sensors, software, and technologies that connect and exchange data with other devices and systems over the internet. These range from household appliances to industrial tools, providing automation, enhanced efficiency, and data-driven insights. Key components and functions of IoT devices/things: everyday items like smart TVs, thermostats, wearables, and machine equipped with sensors. Connectivity devices use Wi-Fi, 4G/5G, or Bluetooth to communicate, usually sending data to a cloud-based platform. Data processing: software processes collected data to trigger actions, e.g. smart lighting turning on or analyzing trends. User interface: applications allow users to monitor and control the devices. Common examples of IoT: smart homes, smart speakers, Alexa/Google Home, smart fridges and security cameras, wearables, fitness trackers, Fitbit, and smartwatches. Industrial IoT or IIoT: automated connected machines with optimized manufacturing processes. Smart cities: connected traffic lights, waste management, and environmental monitoring. IoT enables increased automation, better monitoring of infrastructure, and improved efficiency in both daily life and industrial applications. However, many IoT devices are vulnerable to security threats. Let's get back into the show. And last is enterprise software. Funding to teams with at least one female founder, 24%, up 15% in 2024. Funding to female-only founding teams, 2%, down from 4% in 2024. Deals involving with at least one female founder, 24%, down from 28% in 2024. Deals involving female-only founders, 8%, down from 10% in 2024. Investors reporting a failed portfolio company, 44%, down from 55% in 2024. Investors who believe activity to increase in 2026, 51%, same as 2024. Founders who plan to raise in the next year, 76%, up from 74% in 2024. Founders who are confident they'll raise next round. Founders who are confident they'll raise next round, 68%, up from 80% in 2024. Data-driven insights from Australian startup ecosystem. That's a bit of an overview. Let's get into the report. We're only 5 minutes in, plenty of time to talk about it. So it's by Cut Through Venture and Folklore Ventures. I think you can get it up by putting in your email, your company, and some details on the website. The website again is australianstartupfunding.com, and it says download the 2025 report, and then it goes all the way back to 2022, 2024, 2023, and 2022. So feel free to look. It's pretty interesting. We'll go over it. If you're in the Sydney, Australia region, or if you're just in Australia and further afield and you're interested in the APAC region, which is the Asia Pacific region, APAC, or AN, APAC region. The APAC Asia Pacific region refers to the diverse area of nations in East Asia, Southeast Asia, and Oceanica, located in and around the Western Pacific Ocean. It is a major global economic and geopolitical zone, often including Australia, China, India, Japan, and Southeast Asian nations. Key components and countries, maybe we won't get into this too much. Core countries include China, India, Japan, Indonesia, South Korea, Australia, which we already covered. I believe it's one of the fastest growing regions. Fastest growing economies and markets 2025-2026 forecast: Vietnam, India, the Philippines, Indonesia, China. Key growth sectors in APAC, this before we just get into the report. Digital and tech, the region has the fastest growing insights industry, with digital data analytics growing 22.1%. Private equity and corporate financing are growing rapidly. Retail and consumer high internet penetration, over 1.1 billion users in China alone, is fueling a massive retail shift. Manufacturing, I won't get in too much into the economics. Perfect, let's get back to the report. So there's an acknowledgement. We acknowledge Aboriginal and Torres Strait Islander peoples as the traditional custodians of the land, waterways, and sky across Australia. We pay our respects to Aboriginal and Torres Strait Islander cultures and elders past and present. Then you have the index. The state of venture capital is the first thing, the state of liquidity, the state of the gender equity gap, the state of First Nations entrepreneurship, the state of angel investing, the state of venture debt, the state of accelerators and venture studios, appendices. And it's proudly brought to you. We already talked about Cut Through Ventures and Folklore Ventures, and then it's sponsored by a number of companies: EY, HSBC, the Australian Investment Council, the Coors, Chambers, West, Garth, QIC, LaunchVic, and there's with contributions from a load of different companies. I want to say up to, looks like maybe 50 plus, less than 100. The 2025 marked the 5th year of Cut Through and State of Australia's Startup Funding Report. We began as a one-person newsletter written in a New York study during COVID, has become a small but useful infrastructure for the startup ecosystem. I'm self-aware enough to know that very little of what we do is earth-shatteringly earth-shatteringly clever. Our success has instead come in large part due to competing parties across the ecosystem choosing to collaborate even when they did not have to. That is by Chris Gillings, founder, Cutthroat Venture, and managing director, 5V Capital. The report is 165 pages, so I won't get into everything. We'll just go over the details. We've got about 5 minutes. Anything that jumps out. This is the 5th year supporting the startup ecosystem in Australia, drawing together thousands of contributors from our technology industry, community of founders, venture capital firms, investors, operators, universities, service providers, and governments. It's our ambition that this report sheds light on an industry and the people rapidly shaping Australia's economy and our global influence. That's by Alistair Coleman, founder and managing partner, Folklore Ventures. Let's get into things. Key things to know. Number 1, funding rebounded sharply in 2025, driven by scale and renewed conviction. Number 2, a small number of large rounds dominate total capital raised. Founders raise experiences varied as the market split into fast and slow lanes. AI-driven differentiation commanded a valuation premium, but pricing stabilized. Number 5, AI shaped how companies were evaluated, not just what sector they sat. Mixed fundraising outcomes as limited partner appetite remained tight. International capital became more central to Australian rounds. Capital share rose from female founders, but deal participation declined. Let's continue. There is a piece written by Taran Peters, partner Rampersad, James Cameron, general partner Airtree. Hopefully I've got that correct. Forgive me if I'm wrong. This is a lovely slide. We already talked about 390 deals, the state of venture capital, 5.4 billion AUD in funding, one new unicorn, 46% investors saw a company shut down, 77% investors saw a company conduct layoffs, total capital raise, and then there's a graph just goes up. There's another graph, total capital raise, number of deals. We already mentioned that the share of capital raised by state, New South Wales leads by 33%, Victoria leads 37%, and New South Wales 33%, and Tasmania 17%, Queensland 10%. Top funded sectors: $1 billion in artificial intelligence, 868 million in fintech, 829 million in biotech/medtech, 585 million in climate tech/clean tech, 297 million hardware/robotics/IoT, Internet of Things, 271 million healthcare, 61% of total capital flow to startups with an AI offering. Female founders funding 24%, equity capital raised up from 15% in 2024, 24% deal participation down from 28% in 2024. Medium deal size, angel plus pre-seed is around $1 million AUD, seed $2.5 million AUD, Series A $11 million, and again just presume it's AUD for the rest of the podcast. Series B plus $30 million. Funding stabilizes as confidence and enthusiasm rebuild after reset. Let's get through this. In 2024, if 2024 was a year of correction, 2025 was the year the Australian ecosystem proved its resilience and then found its roar. The liquidity crunch, the elephant in the room, the quote AI native end quote graduation, deep tech and climate resilience, the Silicon Valley Bridge, Outlook 2026. That's by Albert Bielinko, partner Folklore Ventures. Try to get to this as quickly as possible. We're on 13 minutes. There's a number of pieces here. You can look at it yourself. I'll do my best to link it below. A handful of mega rounds pushed Victoria into top spot. Victoria, total capital 2.2 billion raised, 134 deals. New South Wales, 1.7 billion raised, 160 deals. So the deal size was bigger in Victoria. Queensland, 504 million, 61 deals. The rest 363 million, 32 deals. It's very interesting here. This is by Damien Fox, partner, Cartona Capital. Top sectors by deal count. The number one in Victoria was biotech/medtech. The number one in New South Wales was artificial intelligence. The number one in Queensland was biotech/medtech. And the number one in the rest is biotech/medtech. Queensland had a largest Series B, 45.6 million plus. Series B. Pre-seed, Victoria, 925, 2 million in. Very interesting. You can look at it yourselves. I'll just continue, see if there's anything else that jumps out of the page. Early upward reset gives way to steady pricing with a sharp AI premium. It's another article or another passage by Quentin Wallace, co-founder and venture partner, Archangel Ventures. He's a piece here as well. What the right word is to use. It's part of the report. So, selective competition drives larger rounds across all stages. Investor insights: 59% pre-seed and seed deals became more competitive in 2025 versus 2024, up from 30% in 2024 comparing 2023. 43% Series A, Series B deals became more competitive. Medium round sizes continue to rise across funding round stages with strong gains at all stages except seed, which remained in line with 2024. The spread of deal sizes also widened at all stages except seed. Solo founders trend downwards, raise less. Age of startups at time of raise. In 2025, startups raised earlier at pre-seed and seed, while later startup rounds skewed older. This created a clear split in the fundraising population. I think we're coming up to 15 minutes, so we're just on 16 minutes. Maybe I'll keep going for the moment. It's quite a large report, so I'll try to just go through it as quickly as possible. Reigniting emotion in early stage investing, the slowdown beneath the surface. Early stage investing is emotional and it should stay that way. What we've learned from thousands of founders, investor interactions across 2,000 tracked exchanges, a few consistent truths emerge. Most replies arrive on the third piece of outreach. Persistence matters because inboxes are overflowing. Half of investors don't open a deck before replying if the narrative is right. The meeting happens anyway. Only half of first meetings end with a definite answer. Founders often miss the cues that could pull conviction closer. At a broad level, the shape of interest is shifting. AI fatigue is setting in. Investors crave clearer, simpler stories. Distribution now outweighs everything. Building is easy. Scaling remains the test. Diligence requests are up 40%. Execution risk have become the new emotional trigger. Data supports what instinct already tells us. Conviction still lives in the grey space between reason and emotion. Founders just need new ways to see it. The takeaway: early stage investing has never been just about the numbers. It's about people betting on people, the courage, intuition, and belief that spark a decision before the market confirms it. What's changed is where those emotions reside. They've gone dark, buried inside inboxes, calendars, and private notes. While AI can do sophisticated analysis, it's an information and prediction tool, not a decision maker. Iceberg makes that emotion visible by turning an ecosystem's worth of interactions into live human-centered insights. We help founders. That's by Jack Fairweather, founder of Iceberg Software. Large rounds return selectively, reshaping funding concentration. There's a lot here, so I'll go through even quicker. 2025 saw fewer 100 million plus rounds in 2024, but the largest raises ranked among the biggest in Australian venture history. 15 50 million plus deals, down from 21 2024. 20 largest deals accounted 58% of funding, up 50%. Let's see, I think I've covered most things. The support is 165 pages long. Let's just go to the end because they're over the 15 minutes, which is okay. No one's been telling me to keep it that way, but in or around. Let's go to the very last few slides. Excuse the silence. Accelerator programs design shift from curriculum to outcomes. Accelerators are moving away from broad, lesson-heavy curricula and toward tightly designed experiences that prioritize customer traction, commercial clarity, and founder capability rather than teach everything to everyone. Leading programs now deliver targeted, stage-specific interventions that help teams make real progress quickly. That's by Mackenzie Thomas, Program and Community Coordinator at MedTech Actuator. I think that's MedTech Actuator. Specialization is becoming the dominant acceleration model or accelerator model. Let's go to the very, very end. What, quote, good, end quote, looks like for accelerators now. High-performing accelerators are moving past the original one-size-Y Combinator pattern. They are selective, specialized, and measured as much by post-program founder outcomes as by the immediate demo day pop. That's by Juliet Lucas, Program Lead, +8, powered by Space Cubed. I think that's almost everything. Let's just go over a few of the key insights again before we call it, which is on the website. The State of the Australian Startup Funding Report examines the largest data set available on the Australian startup funding landscape. In 2025, the report gathered contributions from close to 1,000 individuals and companies for their insights on the state of Australian startup funding, on the state of the Australian startup funding market. Total reported deals, 390, down 20% 2024 on 2024. Total funding, $5.4 billion, up 31% on 2024. Most funded sectors, artificial intelligence, biotech/medtech, fintech. Top states by deal share, NSW, 41% of funding, Vic, 34% of funding, Queensland or QLD, 16% of funding, NSW is New South Wales, VOC Victoria, and QLD Queensland. Highest raising startups, Firmus, $880 million, Airwallex, $730 million, Synchron, $303 million. Investors most excited about artificial intelligence, hardware, robotics, IoT, enterprise software. That's hardware/robotics/IoT, and then enterprise software. Funding to teams with at least one female founder, 24%, up from 15% in 2024. Funding to female-only founding teams, 2%, down from 4% in 2024. Deals involving with at least one female founder, 24%, down from 28% in 2024. Deals involving female-only founders, 8%, down from 10% in 2024. Investors reporting a failed portfolio company, 44%, down from 55% in 2024. Investors who believe activity to increase in 2026, 51%, same as 2024. Founders who plan to raise in the next year, 76%, up from 74% in 2024. And founders who are confident they'll raise next round, 68%, up from 80% in 2024. Data-driven insights for the Australian startup ecosystem. Thanks for listening, folks, and have a wonderful rest of your day.